from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde in New York. I'm in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, Netflix kicks off big tech earnings Tuesday, followed by Tesla and, of course, Snap. How low is the bar already set this quarter? And will stocks continue to fall even after earnings beats? They turn around today, of course. Plus, Kanye West, or Ye as he's now known, buys a social media platform that is embraced by conservatives who departed Twitter over allegations of political censorship. We're talking with the CEO of Parler about the deal. And Texas needs more details from FTX and Sam Bankman-Fried's deal to buy Voyager's assets. We'll have more on the investigation into the crypto mogul. First and foremost, we're going to get started with the markets. With the stocks surging Monday, traders snapping up tech shares ahead of key earnings. Bloomberg's Ed Ludlow. We got the key movers, Ed.
Yeah, it was an interesting session, wasn't it? Tech really outperforming, the Nasdaq 100 having its best day since July. And for all this Fed speak, I suppose, and economic risk, we are turning very quickly our attention towards earnings. There was kind of this broader risk-off mentality, I suppose, but yields kind of didn't move as much as one might expect. But the big outperformance coming in the Nasdaq 100. I think what's so interesting is we're actually going to ease into it a little bit, Caroline. You look at, in terms of market cap, at least, in the technology sector, in the S&P 500 that reports this week, it's a slower start. Netflix, Tesla, Snap, as we've mentioned, and it's the week beginning October 24th where you start to get the mega caps coming in with their numbers. But what's clear is that expectations have really come down. Earnings revisions picked up steam in recent weeks, which is two ways of looking at it. The optimist in me says, well, with those earnings revisions, the bar's pretty low, right, in terms of having to clear hurdles. So as we said in the intro to this whole show, where do you go if you have a beat or a miss? How much movement will there be on any surprise? It was interesting specific movers that we got on Monday as well. The mega caps kind of led the charge, but Tesla up 7%. Pretty significant gain, but not enough, of course, to reverse the losses that we saw Friday. That stock dropped 7.6% on Friday. But also Netflix as well, really outperforming, up 6.5% going into this earnings season. It's a weird one to get your head around. Expectations are low, but at least we started the week brightly.
As long as you're long the market, Ed.
Right.
As you so well observed earlier on Twitter. Let's have a talk a little bit more about, well, the on again, off again, risk on, risk off, sort of violent moves we see in the market, and whether any of the valuations are currently at a buying opportunity. Dan Morgan, I'm pleased to say, is with us. Synovus Trust portfolio manager. Dan, before we get into the nitty-gritty of the earnings and what you expect, just at these levels, the whipsawing we do see day in, day out, are you ultimately thinking that the erosion in value does mean that we're at some sort of buying point in growth stocks?
Well, Caroline, I don't know if we can put the flag in the sand and saying we're at a buying point, but just kind of reiterate what you were talking about earlier. I mean, going into this upcoming third quarter, the consensus right now is calling for the overall technology sector to drop in earnings by about 7%. The semiconductors, which we've talked about before with NVIDIA and Micron in the last couple of weeks, that's expected to drop 14%. So I think the expectations are so low that if they get any growth out of any of the FANG stocks, including Netflix, even as top-line growth, I think people would be pretty happy. So, but I still think we got to work through these Fed increases before we can draw the line in the sand and say, okay, here's the inflection point. We can move on and start feeling really positive about tech.
Interesting. So sort of the macro dictates the micro at the moment, but talk to us about the micro. Talk to us first and foremost about Netflix, who kicks off. What are you expecting? Any sort of steer on resilience from a consumer right now?
We have to bear in mind, Caroline, that Netflix has reported 2 consecutive quarters of negative subscriber growth. Coming into this quarter, we're looking for a little over 1 million new subscribers. We know they're talking about going to a new platform in terms of advertising revenue. How's that going to affect them? They've been working on their password sharing issues. I think the big bogey, Caroline, to be honest with you, going this quarter on Netflix is, do you know what consensus is for the fourth quarter? They're looking for 4 million new subscribers. To me, that seems a little bit high.
Yeah. Yeah, notable that we're still being very bullish, perhaps, with those new advertising models and the like. I'm interested in what you think of Tesla, which of course in many ways is so retail dictated and has been very prone to just being moved as a stock on sentiment. But what are you likely to see in terms of a steer on growth, particularly as we see the more competition come in, Mercedes, for example, the news there today?
Well, Caroline, we don't follow Tesla, unfortunately, because it is an auto stock. It doesn't fit in our bracket in terms of technology. So I really, unfortunately, I don't have much to add. I apologize.
Apologies for that. Been a bit of a misfire and steer. Thank you for bearing with me. Let's talk a little bit, though, about where you are going to be guiding. Like IBM, for example. This is a company that has been relatively acquisitive, relatively in growth mode. But are you likely to see the corporate side of demand stay resolute?
Yeah, Caroline, so IBM's interesting because they had a pretty good number on the last quarter, their second quarter. Coming into this third quarter, there are concerns about how wage growth is going to impact their consulting business. They're expected to take on about an 8 percentage point negative impact from currency. But if you look at their model, it's kind of interesting because they generate about 75% of their business from software and consulting, and about 50% of their revenues are reoccurring. So they're a very high cash flow stock. It would be something your listeners could look at. The dividend is over 5%. And it's only down 13% year to date, where the S&P is down 25%. So look at IBM as a value stock with very good cash flow.
What has been so interesting is over the last couple of earnings seasons, Snap has almost dictated sentiment, leading then into the Metas, into the other Googles and the likes that are focused on advertising as a model. We've seen them become a sort of bellwether. Are you expecting them to be that this week, and to the upside or the downside?
Well, you're right, Caroline. Last quarter, they came out and it dictated trading with Twitter, with Google, with Amazon. Everybody followed them. Meta. We have to remember in the second quarter, revenues were only up 13%, and they guided for third quarter revenues to be flat. But since then, things have improved a little bit. They're actually looking for revenues to grow 6%. They've had challenges, as you know, Caroline, in terms of the change in privacy with Apple. They've also had competitive issues with TikTok. But you're right, Caroline, they're a company that's going to dictate what happens with Alphabet, Twitter, and Meta in terms of advertising revenue online and how that health of that business is going.
And of course, you have Twitter exposure as well. Is Twitter going to be anything but the story of M&A, or are you actually going to be really focused in on fundamentals?
Caroline, Twitter's a tough company because they don't seem to ever grow their subscriber base. It's been very flat. You've got all the hype about Elon Musk wanting to buy the company and change it around. But if you look at their core growth trajectory, it's been very benign compared to, let's say, a Snap or a Meta or an Alphabet over, let's say, the last 5 years. So they still have a lot of challenges, not only in the overall ad spend market, which is expected to slow this year only to about 16% from 36% last year, but they have issues in terms of how they're structured. Their average user time is only about 45 seconds or about 2 minutes compared to Facebook or Meta that was 30 minutes. To give you an idea of how long people stay on it and actually look at it, it's usually a quick interchange. So that's another challenge for Twitter going forward. So it's going to be a tough quarter, I would expect, for them.
Dan, we want to thank you so much for giving us your expertise, your years of experience and of managing money and getting into the right stocks. Synovus Trust, of course, portfolio manager there. We thank him. Meanwhile, while we're just talking about Twitter, there's a lot of competition within the space, maybe even more the social medias that are focused on conservative voices. Yay, Kanye West, as he is formerly known, buying Parler, for example. What's his vision for this social media platform? And what does it tell us about the changing of the guard in social media in general? We'll discuss it directly with the CEO of Parler's parent company. That's George Farmer. This is Bloomberg. Ye, formerly known as Kanye West, has agreed to buy Parler. Of course, that's a social media platform that's been embraced by conservatives who perhaps have left Twitter over allegations of political censorship. Bloomberg Technology's CEO, that's the parent company of Parler, is George Farmer. He oversees currently the app and is joining us now for the future under Ye. First and foremost, what does he bring you? Because you're still going to be doing the underlying technology, if I'm right. So what does he bring in leadership, in ownership?
Yeah, well, thanks, Caroline, for having me on. I think Ye brings a vision to the platform that is much needed. You've seen the rise of personalities surrounding social media apps, whether it be Elon Musk and Twitter or Donald Trump and Truth Social. I think that Parler very much looks to a charismatic leader, and I think that in Ye we have one who is going to take the platform forward in terms of vision and direction, both creatively, from a marketing perspective, from an outreach perspective. I think he's going to bring a lot of necessary creative talent to the platform. We're excited to work with him. And of course, it puts us back on the map, which is, something that we've long aspired to be back on.
Were you worried about not being on the map? Had you been losing members or users?
Well, I think it's fair to say that the competitive landscape has become a lot more competitive. When Parler was founded in 2018, it really was the only kind of what I quote as a free speech as a business social media app around. And of course, in the intervening 4 to 5 years, that landscape has become that much bit more competitive. It needs the leadership of a charismatic personality. Much as I like to compliment myself as sort of being a charismatic leader, it's just a different game when it comes to outreach and presence in existing social media apps. So, Kanye's obviously Ye's presence on Instagram and Twitter is enormous.
Yeah.
His outreach is global. And as a result, this puts us into a position where he can help accelerate the brand growth, and he can grow the platform into something that he wants it to be, as well as complement our existing technology infrastructure.
What does he think the platform and the brand currently is? How long has he been a user? How did this all unfold?
Well, it came about quite quickly. I would say the deal really took shape in the last couple of weeks. And the reason being is because obviously he himself has fallen victim to the cancel culture narrative, which deplatformed him from Twitter and Instagram. He has been a proponent of free speech for a very long time. But I think that the scales kind of fell from his eyes in regards to big tech censorship in the last couple of weeks. And that was really when the conversation began in earnest. And really, the deal took shape in about the last week. And, we're putting together, obviously, the final touches. We haven't yet concluded the deal. As I mentioned in the press release, it should be concluded in Q4. Yeah. But we were keen to get this statement out to give a statement of intent of where the platform's going.
I'm interested, of course, he has been deplatformed because of accusations of anti-Semitic posts. How do you ensure that you have the right line of what's free speech and what's hate speech?
Sure. So I think philosophically, I take that back to a slightly higher question, which is who is in the position to make that decision? And my question always in response to that is, if I'm making the decision, then what right do I have to make the decision? Parler has community guidelines which outlaws on the platform pornography, financial doxing, gore and violence. And of course, those are stripped from the platform when they're put up. And we also have a very rigorous bot determinant, which removes bots from the platform as well. Beyond that, of course, Parler is a free speech site, and we believe in maximum allowable free speech. We believe in various studies which have proven that more speech actually cures bad speech in some ways. So to show a bad idea a good idea is the best way to cure the bad idea. And that's kind of what we believe.
In terms of ideas of this deal, it's been noted by many that your wife, Candace Owens, is in some way, someone who's been helping certainly Kanye West himself came to her movie, has been talking about some of the things she's shone a light on. I'm interested as to how much she played a part, a role in the deal in some way.
I mean, my wife is an integral part of my life. It'd be difficult to divorce everything that we do from each other. Look, I mean, we're a team. And for sure, she obviously has a relationship with Kanye. They talk very extensively about culture. She's deep in the trenches on various cultural aspects, including, of course, flying to his fashion show in Paris a couple of weeks ago. And so, I wouldn't have had my introduction to Ye if it wasn't for her. The negotiation of the deal itself, of course, is completely left to me. And, I'm more of that aspect of our life, the technology aspect, the business aspect. She has her own business ventures, which are highly successful. She's a very successful businesswoman in her own rights. And so she brought him into the conversation, but, the deal itself was negotiated by me.
What about deals of the future? We've just seen a tweet put out by Elon Musk an amusing one, an interesting one, a thought-provoking one, but him and Ye becoming some sort of team in some way, with him as Twitter and Ye with Parler. What do you make of that? Is that a future you'd want for the company you built?
Yeah, I mean, I think that I was highly entertained to see that tweet, obviously. Look, strategic partnerships on the table, absolutely. I said this morning, I think in a comment that I gave, that we are at the end of the beginning of the start of the Patriot economy, right? We're the end of the beginning of the Patriot economy. This is, I think in the last 5 years, you've seen a massive land grab in terms of companies launching and trying to take positioning in this space. You know, you're now seeing it in banking, you're seeing it in social media, you're seeing it in payment processing, you're seeing it in everything from insurance to coffee, I mean, to everything in the world. And I think what's happening now is that the space has become quite crowded, and you're going to see consolidation. I think you're potentially going to see more M&A in this space. And so I think that's going to be very exciting. Look, the decision is now Ye's, you know, and we are excited to work with him on that possibility. There's absolutely a possibility that he could want to turn the company around and sell it and make it something part of much bigger, or in turn, he could be looking for acquisitions himself. That's a discussion that I have yet to have with him. So I think this is very exciting.
George, we appreciate the time. Thank you, George Farmer, Bloomberg Technology's CEO. Meanwhile, of course, we've been talking about social media, the landscape. Peter Thiel's been backing some of those new entrants to the conservative social media platform area. And meanwhile, a German startup delivering drones to Ukraine just got a big boost from one of Elon Musk's close partners. Quantum Systems has received $17.5 million in new funding from investors, including billionaire Peter Thiel. Thiel says Quantum Systems is leaps ahead of the competition. It supplied at least 42 drones to support the Ukraine army. Coming up, Instacart has slashed its valuation multiple times this year. Is the coveted unicorn status on being, well, deemed across, at the moment, killed in the world of big tech? We'll have to work out whether unicorn should really be a name anymore. My next guest thinks so. This is Bloomberg. Next guest says that by 2024, we'll have redefined the term unicorn, entering perhaps a Darwinian era for the tech sector. Greg Martin is a venture capitalist behind companies including GoPro, HubSpot, and co-founder of Rainmaker Securities, one of the largest platforms for trading shares of private tech companies. Now, first and foremost, walk us through, before we get to Darwinism, talk to us about why unicorn, maybe the term doesn't make sense.
Well, Caroline, thank you for having me. You know, if you look at the end of 2021, we had over 1,000 what we call unicorn private technology companies that are market caps in excess of $1 billion, which represented about 4.3 trillion of market cap. Just unprecedented levels of size of companies. Now, certainly there's a lot of great companies in that 1,000 that do deserve to have the $1 billion+ market cap, and those companies will go public and be large companies in the public market someday. But a good percentage of them got way out over their skis on valuation. And, you know, partially because investors were chasing yield, they were looking for growth, and they were looking for the next snowflake, if you will. And the problem is there are very few companies that really can aspire to those kinds of heights. And I think that's why we're going to see a lot of these companies not sustain unicorn status in the future.
Will we see them fading? Do we see more M&A? Do we see, what does Darwinism look like for you, a Darwinian era in that respect?
Well, listen, I think you will. There are truly companies that are of the size and scale and market leadership that will go public, and they will grow their valuations. I think there are a lot of these companies that, unfortunately, you know, their valuations were set very high. Their businesses are still subscale. They were given a lot of cash to grow. And the reality is the growth just isn't there for some of these businesses. And I think those businesses will struggle to ever become profitable. And so I think for those people, and I think there's a good number of companies that are fit in that category, they will be looking for a home. I think the private financing markets are drying up for some of these companies, and so they will be looking for a home. Now, the good news is many of them have great products. and there is going to be a very vibrant M&A market, I believe, in the next 2 years.
Okay, M&A, maybe at rather better valuations than previously, for the buyer at least. I'm interested, therefore, as the seller and as a talent member in these companies that are suddenly eroding their market value, suddenly people who've been promised certain exits or certain liquidity moments or indeed being paid in shares. How does that look like for them? What does this mean for the talent going forward?
It's a big problem. And you can see some companies are being very proactive about that. Instacart, for example, today just lowered their internal valuation yet again, which means the bar for a new employee or executive coming in is much lower. If the bar is too high, then your options or shares or whatever you get when you join the company are always going to be out of the money. So I think we're going to see a lot of repricing of internal options in order to keep employee morale up, because the last thing you want to be doing is working for a company that's worth 10 billion with your options, it's only worth $1 billion, because when you're there for equity, you want to make sure your equity has value. So I think that's something we're going to see a lot more of what Instacart did today.
Do you see future unicorns being born in this era? Many people feel that sort of in the toughest of times, great stars are born out of them. Do you see that this could be an era of ingenuity, of innovation, or is this going to be one of stealth and lower growth for the time being?
I absolutely think that we will have many new unicorns that are born during this period. I mean, one of the things that COVID, really accelerated was the adoption of new technology, and a lot of the incumbent players were left behind. A lot of the legacy technology is behind the times, and so it's really created an opening for innovative entrepreneurial businesses to sort of seize the day and seize the moment and start businesses that sort of are the path of progress, the next generation of where technology is going. So I actually think now is a good time to start a company. I just think we won't see as many unicorns as we did in 2021.
And let's even get started on decacorns. Greg Martin, we want to thank you so much, co-founder of Rainmaker Securities, talking us through his hypothesis of where we go for the big company valuations going forward. Meanwhile, coming up, we are going to talk about the need for more diversity in the world of VC. Stephanie Palmieri, Melody Coe, partners at Next View Ventures, has talked to us about what it looks like actually on the ground right now. Meanwhile, we're going to be dialing back into what the market's made of the day. S&P 500 having one of its strongest days. Best Monday of the year, we understand, thanks to one Dan Curtis. Stay with us for which tech stocks outperformed as we look ahead to some of those earnings coming thick and fast. Netflix, of course, on deck for Tuesday. From New York, this is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in New York. Let's get back to the markets. Let's get back to the chip sector in particular. Bloomberg's Ed Ludlow, you got the latest numbers in terms of semiconductor delivery times. It was interesting, huh?
Yeah, interesting. Lead times for the semiconductor industry averaged 26.3 weeks in the month of September. That data coming from Susquehanna Financial Group. 26.3 weeks, down 4 days from the previous month. 4 days doesn't sound like a lot, but this is actually the biggest month-on-month drop in lead times since the firm started recording the data. The lead time, of course, being the gap between when an order for a chip is placed and when it's delivered. There are still pockets of tightness in supply, according to the firm, particularly in microcontrollers and in automotive specialized chips. But you see that chart, we're in very elevated levels still. This is still a market where supply is an issue, but at least we're now heading in the right direction. At the same time, we also hear all these worrying signals, Caroline, about demand. I think, of course, about AMD, whose third quarter sales estimates missed projections by $1 billion. We reported, according to sources, that Intel is going to be laying off thousands of workers because demand for PC chips in particular has dropped off. So it's going to be really interesting. There's been so much pain in the semiconductor sector, at least in the equity market perspective, so far in 2022. This is a really key earnings period where we try and work out what that balance is, where the demand is disappearing and the supply is improving, and where we net out for an industry that you and I have been glued to for a good 2 years now.
Certainly have been. Thanks for keeping us up to speed with the moves on the day and indeed some of the lead times going forward. Let's get back to some of the views that's happening in terms of valuations in the private part of the market as yet? Because let's talk venture capital. We want to talk about gender. We want to talk about equity within, lack thereof. But some steps been made forward. Next View Ventures just announced, well, it's close to $200 million new funding round. It's got its largest raise to date. And it's bringing on Stephanie Palmieri, a founding partner of Allraise, and of course, former partner at Uncork, as an equal partner. She joins me alongside, of course, the partner, Melody Ko. Both of you now at NextView. Congratulations on the hiring, the beefing up of the team, the 200 million. Let's talk first and foremost, Melody, about the 200 million and the opportunities within seed funding, within smaller checks being put to work. Is now the right time? Are you going to see great businesses built?
We're pretty excited. I think that there's not a better time to be investing early stage company at the formation stage. As always, we're very excited to partner with founders just at concept stage or founders who are getting a little bit of traction post-launch. And, with the new 200 million under commitment across both of our early stage seed fund as well as the first opportunity fund that we call All Access, we really can partner with founders across the entire early stage pre-seed to seed spectrum. So yes, we're excited.
And what's so impressive is the previous 100 million investment vehicle, you put your money where your mouth is in terms of talking about backing diverse founders. And Stephanie, I'm sure in many ways, this experience, this proof point was what attracted you to joining Next View Ventures. And I'm interested as to how you remain and build on that commitment, having, of course, been one of the key founders over at Allraise.
Yeah, absolutely. I think at the end of the day, diverse teams invest in more diverse founders. And, I'm really proud of the fact that our team at Next View is very representative, and we can still be more representative of the what we want to see in our industry. And so, at the end of the day, it was really important to me to join a team that not only is diverse itself, but also values that in the founders it invests in. And I think for us, diversity means many things. It means background, experience, ethnicity, race, gender, as well as geography.
I'm interested, Melody, on when you see a downturn, how it tends to affect women, people of color building businesses. When you go more macro, when I look at the jobs data, for example, very sadly, within the numbers, you're seeing women being the first one in, well, last one in, first one out. We're seeing already the participation rate being eroded. Are you worried that in some way people start backing away from the commitments they've made during 2020, 2021 to back diverse leaders?
Yeah, I think that, during times like this, there's definitely a risk of us going backwards. I think venture as an industry is fairly insulated and very relationship driven. So during times like this, there is a challenge of a lot of investors, hopefully not, but a lot of investors might go back to their inner circles and founders that look more quote unquote proven on paper. So, I think that's something that we definitely want to be conscious of. And, hopefully the industry at large can really, try to pay extra attention, especially during times like this, when it's easy to fall back to, bad habits.
Indeed. And Allraise, of course, Stephanie, is something that was meant to help accelerate, shine a light on people of color, women who are building great businesses and help accelerate their growth, support them. At this time, how are you finding the next exciting investments? Where are you looking? You're going to be bi-coastal. We've got New York offices, San Francisco, but are you looking across the US? Are you looking globally? How do you find these leaders?
Yes, I'm really proud to say that we're looking across North America, and we're tapping obviously into our diverse networks that we have within the Next View team, as well as more broadly speaking, we look at the founders we've backed in the past, the folks we co-invest with, and we have the flexibility to invest, not just in the markets in which our offices are based, but again, like I said, all across North America. And we'll be looking for great founders because we really believe that great ideas can come from anywhere. And I think what's been really interesting is, Next View has invested with this broad geographic focus since its inception. However, we've certainly seen a broader trend in the market, in this kind of post-COVID environment in which companies are being built with more and more distributed teams. So it's not surprising to me that we're seeing early companies start in more and more places, and will continue to be an outlet for founders to tap into the major funding markets in San Francisco, New York, and Boston, where we have home offices.
Melody, is there particular industries that attract you at this moment in time? Are there particular areas or problems you think will become ever more evidently need to be fixed in this particular period?
You know, we talk about at NextView, we focus on fixing the broken user experiences across a lot of everyday user categories and habitual moments, where whether it's at work or at home, where a lot of people spend time. So, you know, I think there are a lot of interesting challenges right now. You know, one example can be everybody's doing a hybrid work from home and going to offices. So there's a lot of everyday working moments that can continue to be redefined and you know, make better. And similarly, there are lots of challenges at home, you know, using that same context. And we talked about women earlier. You know, a lot of working parents and mothers are really, you know, struggling to juggle between you know, hybrid work and doing things like this on screen, and then, you know, turn around having to deal with childcare. So
had a few cameos last week of a couple of kids coming in, so it's still there, it's still on the edge.
Yeah, for sure.
I love that you're focusing in on that, and I mean, the balance is always real, and we're at the coalface of it in many ways. Stephanie, I'm interested in what the Bay Area has to offer right now, and whether you're feeling this push-pull of remote work, people leaving at the moment. Do you feel that? Do you sense that? Are people wanting to build businesses in other places than San Francisco?
Yeah, I think the big difference here is the Bay Area is still a great place to build a business, but the barriers to building a great startup in terms of access to talent, access to capital, that's become more and more distributed. So it's not shocking to me that we're seeing more companies built in more emerging tech markets. What I do think is true is that there's still a tremendous amount of energy here, and there's still a tremendous amount of dollars, both at seed, but also in follow-on dollars. And if you think about Melanie and my job as seed investors, you know, we're writing that first early check into companies, really founders who are getting a business off the ground and running. But far and away, we're not the last check, the last capital into these companies. And so really, I think the reality is there's a lot of capital concentrated here. And again, I think founders are always going to benefit from having one more node, one more access point to that capital.
And Melody, like, we laugh about, the cameos, the kids coming in, us being in a coalface, but we're not actually, because we're lucky. We're able to afford childcare. We are in quote unquote privileged women leading incredible lives. And I'm interested as to how you fix problems across socioeconomic divides, as well as problems that affect all areas of diversity, whether you're women or people of color, but also the socioeconomic variety and inequality that we still see in the US.
Well, that's the big job. Not just, you know, I think we talk about this concept, we call it everyday economy. So within that term, we think a lot about all different types of everyday person. And, you know, I think if with that framing in mind, we're reminding ourselves every day to look for solutions, not just for people like you and me, but for other different types of everyday user. And I think it's also important for the rest of the industry, you know, our entire asset class, to really think about finding solutions, not just for, you know, I call it coastal elites, right?
Yeah.
But, you know, really truly focusing on mass market problems and leveraging technology to better that.
Stephanie, to that point, is there anything that really excites you at the moment in terms of what's being solved for that you think will be a $10 billion business that services not just the wealthy, that services those that were earning less than 50,000 or more?
Yeah, I mean, I think to Melody's point, I think technology offers us the ability to build companies that provide efficiencies and economies of scale. And so if we can lower the cost for, you know, small businesses, for individuals to put more, you know, money in, you know, within their homes by being able to get paid faster, by being able to make their dollars go longer, by better access to credit, you know, all of those types of solutions are the things that we're looking for at NextView, which are really, again, that, you know, everyday economy. You know, at the end of the day, investing in companies that service a very small subset of the population are not really investing in multi-billion-dollar companies, right? When we think about what makes a venture scale company, it's a company that addresses very, very, very large populations, very large global populations.
Here's to more solutions for very large total addressable markets. We want to thank you both so much for putting so much thought across the board in terms of investing for good and for diverse endpoints. Melody Ko, Stephanie Palmieri, congratulations on the new fund and indeed on the new team building Next Few Ventures. San Francisco, indeed, Mayor London Breed is preparing her city to move beyond its tech-dominated landscape. Now, acknowledging that many remote workers will never fully return, as we're just discussing, Breed said, quote, "Life as we knew it before the pandemic is not going to be back." The comments now show a shift for Breed, who has spent much of this year working to lure people back to their offices as the city's return-to-office rates remain stuck at 40%. Coming up, why Texas regulators are investigating Sam Bankman-Fried. More on that. This is Bloomberg. It is time now for our daily crypto report. A lot going on, as always, with FTX. But Sam Bankman-Fried is being eyed by Texas right now. Bloomberg's Shonali Basak is here to explain what part of SBF's entire remit and recent doings is Texas looking at.
It's a great question for right now because it's tied to a deal. This is all revealed in the vein of their purchase of assets from Voyager Digital. The Texas regulator is now saying that they shouldn't move forward with that $1.4 billion purchase of those assets. And that's partially because of this dispute over whether these are securities or not when you look at the yielding assets that are being under FTX's purview here. What's interesting is it's not just FTX trading, it is also Sam Bankman-Fried that they are looking at. But you also have not just the deal in play here, but also that classic question about who's overseeing the yield products that are under the purview of all of these large exchanges that are increasingly getting bigger in this game.
So interesting. So the white knight hypothesis of Sam Bankman-Fried sort of being put under the spotlight to a large extent here.
Yeah, and it's worth taking a look at what they had to say in response to this. They said they have an active application for a license that has been pending, and they believe that they're operating fully within the bounds of what they can do in the interim. I think the other reason this is interesting is because you know that FTX has been operating in the Bahamas, separately in the U.S., separately in different jurisdictions around the world. And so how does Texas as a regulator fall in line with what's happening on the broader scale globally, as well as with the SEC and CFTC?
Okay, let's talk about the other regulators. Let's talk about the eyeing of the Three Arrows Capital. I mean, what is going on there? I understand that is this a CFTC issue at the moment?
Yeah, interestingly, the SEC and CFTC are looking at whether they should have registered in the United States. Okay. So even if you're operating abroad, and as we know that the location of the founders has been under dispute, they've been very hard to reach in the process of these bankruptcy filings where they need to be paying certain creditors back, you do now have the SEC and CFTC coming in and saying that, or not saying that, these are people familiar with the matter have told Bloomberg that they are looking at, in particular, whether they had violated rules by misleading investors and should have been registering in the U.S. in the first place. So again, that global issue coming into play on how investors globally are treated without certain disclosures and regulations. So this is, instead of certain products being sold here, we're looking at the very nature of how Three Arrows had operated in itself.
Just bring us up to speed with where we are in the whole liquidation process. I mean, this is never done before, certainly not on this scale, and certainly with these sorts of new types of assets and securities.
It's interesting. When you ask certain people who had interacted with Three Arrows, you have to ask them whether they think they'll get their money back in the first place. Yep. Because, again, who is owed what in what part of the capital structure? Yep. This is not your typical debt proceeding where there has been...
The waterfall is not as clear as it would be.
Exactly, but Teneo has been appointed as an intermediary here to work on this. But again, even they have not been able to really access the founders in the first place. So how does a bankruptcy proceeding happen globally without the founders being able to come up to the table?
Yeah, well, Zoom can't work for everything. seemingly.
Twitter either. Twitter messages is how they've been trying to be approached by many a party in this.
That feels quite old school. Shonali Basak, we thank you so much. She's always across everything when it comes to crypto. And don't miss Bloomberg Crypto every Tuesday at 1 p.m. Eastern for even more of a deep dive. Meanwhile, coming up, words of warning coming from Chinese President Xi Jinping, vowing to speed up innovation in areas vital to technology self-reliance. More on what this all means, particularly for the chip sector. This is Bloomberg. Chinese President Xi Jinping pledged his nation will prevail in its fight to develop strategically important technology, this underscoring Beijing's concern over a US campaign to separate it from cutting-edge chip capabilities. This, of course, is all at the 20th Party Conference of the current administration. Let's bring in Bloomberg's Debbie Wu for more on this, because the great gathering is upon us, the Communist Party over in China, big speeches, big push forward as to whether or not Xi Jinping will indeed maintain control over the next 10 years as well. But in the here and now, what are we hearing in terms of pushback against the latest moves by US to cut off access to key technologies?
So Xi said on Sunday that China will continue to innovate to reach tech self-reliance. But the billion-dollar question is whether Beijing can indeed push forward with its efforts after the new round of U.S. export control rules. The new measures that Washington is adopting to hit at China's tech development is broad. And then we have seen that even non-U.S. companies like Dutch equipment supplier ASML has been ensnared in the new round of restrictions. Yeah, one of the broadest ban is about this ban restrictions for U.S. persons to assist with China's chip technology development. And then this is like the impact, the fallout from this is something that we are still trying to get a better understanding about.
In all, do you think that this is going to be a larger problem on China's economy at the moment? We know that they're, of course, being beset by COVID, lockdown still that restrain the economy. We know that overall the real estate has been a particular area of concern. How much of a worry in the list that they have is the limitation of US expertise and indeed technology?
In the near term, probably this is not going to cause a major problem for China's economy. But in the long run, this will certainly affect Beijing's ambitions to better compete with the U.S. on several fronts, particularly on emerging technologies, including artificial intelligence and self-driving technologies. So in the long run, this could pose a problem to China's efforts to sort of drive its economy with cutting-edge technologies.
It has continued to be a deteriorating situation between the US and China. Will this be speeding this up? How do you foresee relations unfolding between the two key economies in the world?
So with the latest U.S. export control measures, it is already causing some problems, some issues between the relationship between the two great powers. So there are already a report saying that Beijing is now stonewalling U.S. efforts to set up agenda for the upcoming meeting between Xi Jinping and President Joe Biden next month during the G20 summit. So whether this is going to have sort of like more fallout from the U.S. measures, including maybe Beijing is going to consider ramping up pressure on Taiwan, and it remains to be seen. But what we are sure of is that the deteriorating relationship between Beijing and Washington certainly will make investors feel more jittery about the markets.
And it's certainly being reflected in many of the chip makers' stock prices at the moment. Debbie Wu, we want to thank you so much for the areas of expertise when it comes to chips, when it comes to Taiwan, when it comes to hardware as well. Now, that does it for this edition of Bloomberg Technology. But you do not want to be missing tomorrow, because we, of course, have a key voice coming from McKinsey, Irina Yi, and Lean In's Rachel Thomas talk about women in the workplace. It's the annual report that's coming out. Don't forget to check out, of course, the podcast. You can find it on the terminal, as well as online, on Apple, on Spotify, and of course, on iHeart. But amid what was a bumper day in terms of on-the-day moves for stocks, particularly in the growth area, in technology stocks. We leave you with preparation, perhaps a more volatile one coming out tomorrow. We brace for earnings, of course, for Netflix. From New York and from San Francisco, this is Bloomberg.